Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So for this week, I'm going to present the Asian session live market analysis on today, that is 27th of January, between 5 and 5:30 GMT. I will try to explain what are the expected market moves for this particular week, 27th of and to 31st of January, and also the levels at which you could come across the currencies making the moves in this week. So they are all nothing but the statistically derived informations, and that can be used as a guiding factor while you are making the trading decisions. So first of all, let me explain to you the expected market moves in this particular week. This is the last week of the month, and especially the yearly trend reversal time will get over by this week, because it started by first week of December, and the whole of December we have seen the volatile moves, and then subsequently during that of the January also, from start they have been making the volatile moves, sudden gain and sudden drop, that sort of moves they have done it in the case of the majors and also in the case of commodities in a sequential trend reversal way. And we have seen that all the currencies have undergone the major whipsaw moves, and you will come across more intensified moves could be seen in this particular week. So one has to be very careful while taking trading in this particular week, because the players are expected to make some quick extended stop and moves. And you know that the extended stop and moves are the one wherein they suddenly make a drop from that of the low or near that of the high after the consolidation, drop about 100 to 150 pips and come up straight away in a matter of about 30 minutes to 2 hours or within the session. Or sometimes very rarely when the volume is low, they drop during the first session and then gain during that of the second session. And today we have come across similar move in the case of USD yen, and when it was trading around that of 102.40, that is 13 pips below, this is the Friday close level. They quickly made a drop to 101.78 as an extended stop and come back again to the high. And this is a typical extended stop and they had done it. And you know that attribute for that, USD early fall attributed to Mrs. Watanabe's stop losses. You know, Mrs. Watanabe is a nickname for that of the Japanese housewives. So you find that that sort of interpretations will be given, but ultimately the players are making such extended stop-ins. So what do you understand from this? There may be so many attributes, like Japanese housewife have taken the positions of stops and things like that, but the players are here to make extended stop-in and hit the stops. So now the attribute is they just hit the stops of the Japanese housewives. So you know that from time to time you come across various such attributes will come in this particular week, because extended stop-ins means they will suddenly make the market bearish and then reverse in a matter of about 1 or 2 hours. Then it will become bullish. So what attribute can be given? And so all the imaginary attributes could be given, and they are all nothing but the excuses. So keep in mind that this week the market is expected to make such volatile moves. And so today, 27th of January, swing and slide moves could be seen during the Japanese session, and then a small dip during start of the European session, and a quick rise could be seen on the upside in the case of Euro and GBP. And now we look into that of the Euro GBP and Japanese yen. All the three and all the four majors are showing positive net change. So the players are here to make gaining moves in all the four pairs at varied levels. More pips in the case of numerator and less pips in the case of denominator. That is mainly to gain the levels in the case of yen crosses and also the CHF crosses. So you find that They are expected to make such moves during the European session and also swing and form up moves during the US session. So as the market gains, people might tend to take sell positions. And you know that the traders have got the feel now. FOMC meeting is there on 29th of January. So there's going to be a harsh steps taken by US. As a result, Euro and GBP could come down, or there might be the money squeeze, and as a result, there could be drop in the case of Euro and GBP. The speculative positions could be wound up. But when the traders take such sell positions during the early gains, you know that the players are there to make one extended upward stop and hit all their stops with some other story and then start making that drop. So if you are a smart trader, what you have to do is, when they are making a consolidation like this, you simply wait for the market to make such extended stop and moves. When they make an extended stop and move on the upside or on the downside, and see that in the last 30 minutes, they don't breach the new low or the new high, then try to take a sell around that of the high or try to take a buy around that of the low. You will be able to see phenomenal profit. That is the only way one can trade during this particular time frame. Otherwise, you will find that any level you take a sell or a buy and keep stop, the players are there to hit the stops using some stones, because they have to aggressively gain the money for the year beginning time, and for that they will use such approach to that of the market. Whipsaw moves are going to be common during this particular time frame. Then tomorrow, 28th, swing and slide moves could be seen during the Japanese session. Then European session again could show the swing and rise move. That could again be a big rise move, and followed by that swing and slide moves could be seen during the US session. Then everybody will start thinking about FOMC. So avoid committing positions. You might come across thin volume market happening. Then on Wednesday, dip and firm up moves could be seen during the Japanese session, and swing and slide could be seen during the European session. So they could make a quick drop before that of the FOMC and continue to make the lower level swing, and then after the FOMC they could make a drop. Then afterwards, 30th, they could firm up during start of the day and then slide, then dip and firm up. Either way, swings could be seen, then swing and firm up, they could make it. Then again on Friday, they will make the lower level targets and try to drop and then rise quickly and drop. Either way, stop-ins. Then finally slide during the early US session and slowly firm up during the late US session to induce the last minute short sellers. That is, after the drop, some people tend to take sell positions and they will be induced to do the short covering. And next week, we'll come across February. Then 3rd to 7th of February will be the first week. And during that time, the market is expected to make the volatile moves and also the month beginning time. So during the month beginning time, initially they will make a drop and then firm up. After that of the non-farm payroll next week. Then you'll come across either way volatile moves during next week also. So you'll find mostly the range-bound swings happening in the market. And from that of month of March, you'll find massive gaining moves in the case of the numerators. So what could be the expected range in this particular week? Euro could form the low 1.34 and the high could be 1.38. So currently they have shown 1.3675 and 3691 as the low and the high. GBP could come down to that of 1.62 and go up to that of 1.66. So far they have shown 1.6507 and they are expected to make the quick upward move and the quick downward move in this particular week. As I explained, from that of 105, area in the case of USD, and they dropped it to that 101.78, telling some excuses. And this is what I was telling you, that from 105 they will just drop to 101, and that will induce Euro and GBP to go up. Even though last week beginning, you will notice that Euro and GBP were doing lower level consolidation, and people were thinking that it could become, they could make further downward move, but ultimately they made the upward move. And so that for that they used USD yen as a trigger and dropped it. I told you many times that GBP, they use it on the downside or the upside to create the bullish feel, and similarly USD yen, they drop to create the USD weakening move or gain USD yen in order to make the USD weakening move and the USD gaining move by quickly gaining the levels in the case of USD yen. These two are the currencies they primarily use to change the market sentiment. So that we have to keep it in mind. So now people will be afraid to take sell positions, small gains. They could look into that of the resistance and take sell positions, but subsequently the players are expected to make one extended stop and on the upside and then drop. Watch that and then take positions before become addicted to trading and commit a position and expect the market to fall, simply following the charts or any other sentiments and whatever it is. Then in the case of USD CHF, 89.25 could be the low and 92.75 could be the high, the estimated low and the high. So far they are shown 89.34 and 89.49, and the upside could be seen. Stripping and rise moves could be seen. In USD CAD, I was explaining to you that they will just take it, weaken that USD yen first. And later on, you would have noticed that all the five currencies were showing first net change just about 1 hour back, and then subsequently Canadian dollar has made the dip, USD CAD has made the dip. So USD CAD 1.1058 is the low, 1.1071 is the high. They just made last week an extended upward stop and above that of 1.11. Always they try to do it, and so they finished extended upward stop in the case of Canadian dollar and extended downward stop in the case of Australian dollar. So they already started making the USD weakening move in those two currencies. As a result, USD CAD is expected to come down drastically to 107 area, and Australian dollar is expected to go up to 89 area. So watch that and trade. So you could come across the higher level swings and the slide in the case of Canadian dollar, and lower level swings and rise could be seen in the case of Australian dollar. So that is what at that time you might find that Euro and GBP are making that drop, and USD yen is expected to make a downward move as well as the upward move alternatively. So I explained to you the expected market moves and also the levels at which the currencies could trade, and they can just breach those levels. There is no guarantee, or they are all nothing but the calculated levels, and there is no need that they are to be respected by the other players. But based on the probabilities they have been estimated, you can watch and try to take positions accordingly. And for that we use the market reading technique. So what we do in the market reading technique, we note down the initial lows and the highs around 2:30 GMT, 4 majors and 2 commodity pairs, and use that as a reference level for the day. And entry, we try to take a buy near the low or sell near the high. If the high, low or the high are not breached for 30 minutes from the start of the session. So after that, we keep 30 pips hedge order to limit the risk. And once the position makes profit, we keep stop at entry. Suppose you have taken a buy near that of the low during Japanese session, and try to close it within the session by end of the Japanese session, because mid sessions they are known to handle the crosses. So early and the late sessions we try to enter, and if you enter during the early session, close it during the late session. Then wait for the gap times to get over and wait for the next early sessions to start. And after 30 minutes from the start of the session, if the market is near the low, we try to take a buy. If the market is near the high, try to take a sell. When they are not breached, in your 30 minutes observation from the start of the session that they are not breached the new high or the new low, then we try to close it during the late session. Every session you can look for that opportunity and try to trade it. In this, the main important issue you have to look into consideration is the spread between the high and the low should be more than 40 pips in order to commence a trade in a currency pair. Okay, that is the only criteria we have to take into consideration. As they proceed during the day, you'll find the spread between the high and the low will get increased. Now, we have noted down the initial lows and the highs in all the four majors and two commodity pairs. So Euro has not breached the low or the high. The spread is low, lower than 40. GBP has not breached the high or the low. The spread is low. Yen has also not breached, but Yen has breached the high. 102.46 was the initial high, and they breached, went up to 102.55, and then come down to that of 102.42. So a brief upward stop, and they have done it, but they are expected to make a quick gaining move because they had done the downward stopping. So they are expected to make the quick upward move along with that of Euro and GBP in the case of USD Yen. But the pip variation might be seen, but they intend to make the contrarian move. So they indicate it. We can follow it, and accordingly we can take positions by looking into the alternate changes. In the case of CHF, they are not breached the low, but the high has been breached, and they come down, and they are supposed to gain the levels. In the case of USD CHF, slowly. Then Canadian dollar, 1.1058 is the low, 1.1071 is the high, and the spread is very narrow. So when they start making an upward stop, and you can try to take a sell, because in the case of Canadian dollar, they always make an upward stop and alternate with it of the downward stop. So whatever they stop and they do it first, we try to capture the position. Once they stop cutting the new low for more than 30 minutes to 2 hours, then try to close it when they are making an upward stop and during the day. Then in the case of Australian dollar, they have done the downward stop and 0.8678. They have shown it and come above that of 0.87. And 8710 was the high, and they just breached and formed 8736 and still holding above that. So there is a technical trade potency that we can buy closer to the initial high, and they are expected to gain the levels. So then afterwards they could silently do during gap time or session close time a quick upward stop, and because the spread is very narrow in the case of Canadian dollar, whereas in the case of Australian dollar, the spread is increased more than 40 pips. So they could make one more extended upward stop in the case of Canadian dollar, USD CAD, probably to another 10-15 pips above that of the high, and then start making that drop. So they have completed the extended stop and move in the case of Canadian dollar and Australian dollar. In the case of Canadian dollar on the upside, and in the case of Australian dollar on the downside, and they are expected to make such extended stop and move in the four majors. Watch and do it carefully. So session timings, I have been explaining it. This is the chart, you can look into it. And I'll try to answer to the questions which are asked here. I'll come back on 30th and review the forecast and again and see how exactly the market is expected to make the moves. From Mohan Kumar, what will happen in Euro Yen this week? It may gain the levels from here according to today's stop and move in the before Japanese session gap time. Yes, they quickly made the downward stop and you come across the net change is positive in all the three currencies. So when net change is positive and they are expected to gain then slowly in all the three. That means the Euro yen and GBP yen crosses are expected to gain the levels. In Johan, what happened with GBP on Friday? Okay, in the case of GBP on Friday, they gained the levels initially during the European session to 1.66 and then further above. And then, you know that BOE governor's speech was used as a trigger and they quickly dropped. So this is mainly to gain the levels in the case of Euro GBP cross. You know, Euro GBP cross the week before, we would have seen that it was making a dismal drop on the downside because at that time GBP was gaining the level when Euro was holding at the lower level. So a positive net change in GBP and negative net change in Euro was made on the previous week Friday. And the last week Friday, they had done the Euro on the positive net change and GBP on the negative net change, just opposite of it. Then, Karthik Raja, what do you think about gold this week? The gold is also expected to make initially gains and it is expected to move in tandem with that of Euro and GBP this time. And so when Euro and GBP are gaining, it will also gain and suddenly make the drop for FOMC and start gaining for weekend. Then Ini, may you please show the window? Yeah, I'll show the slides. Then George, if any pair dip and reverse to initial low or high, what does it mean? And if they stay at low or high, then what it indicates? I explained it many times. Suppose this is the initial low in the case of Euro 1.63675. They come below that, say 1.3650, and come up to that of 1.3675. And in 30 minutes, it doesn't breach or go above. Or it breach and go above and come below that in less than 30 minutes. That means they just made a pullback to make a drop. But if they gain above that of the initial low and stay there for more than 30 minutes, that means they will go up to that of the high, breach the high and go above. Hope you are able to understand. Then demand. What day are you expecting the quick drop down to 101.25 level in USD yen? The USD yen drop could be seen tomorrow or early part of day after tomorrow before making a quick rise after FOMC. Now, how it is indicated in the weekly forecast? See, I wanted to help the small traders, so those who are doing trades in the case of Euro and GBP. Okay, so that is why I focus and give only the forecast pertaining to that. And just because others ask the questions pertaining to the yen and other majors and also the crosses, I'm explaining it. Because I do not want the small traders to enter into the crosses, especially when they make the whipsaw moves. You know, on Thursday, they made the drop in the case of the yen crosses, like 250, 300 pips. And the small traders may not be able to withstand unless and otherwise they keep stop at entry. Whereas in the case of Euro and GBP, whether you have taken a buy position or a sell position, even without a stop, if you wait for 2-3 days, you will be able to book profit. Whereas in other currencies, they make the one-sided move, you may not be able to withstand. So that is why I want them to focus only on Euro and GBP, not other currencies. Please understand, I am here mainly to help the small traders. So, any more questions? Fine. So I'll just show the slides of the forecast. So this is the expected market moves for this particular week. So this week and next week, we will come across massive moves happening in the market. Extended stop and could be seen on the upside as well as on the downside suddenly, because the time wherein the yearly trend reversal gets over, then also the monthly trend reversal will start next week. So they are expected to gain the levels in the case of Euro and GBP Monday and Tuesday, and then start making the drop from that of Wednesday. There is an overall expected trend. With regard to the levels, so these are all the expected low and the highs in all the four majors in the commodity pairs. You make a note of it. And also the expected trend is given, and that will be unclear, especially when they are making up and down moves. From that of the second week of February, we will come across more trending moves in the market. Okay. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. So I'll come back on 30th and try to review Thursday and review the forecast what is given and also the levels for this week and see whether the market has moved in tandem with the expectations or anywhere it got deviated. Thank you one and all. See you on Thursday.